Good morning, everyone. How are we doing today? It is Saturday, August 7th, and this is our live Q&A session. We do this once a week. We do this Saturdays at 8 a.m. Pacific. Again, this is a time for you to ask questions and for me just to share what's going on in the one rental at a time universe. Again, I'm very happy to say that we have more and more experts adding content. I've been working with a tremendous Airbnb resource who is currently creating content with a goal at the end of the month. So we will be adding that content. Matt, the mortgage guy, is completing his section. It's actually already loading. So we will hopefully have that done sometime next week. Jonathan Twomley and I talked once again about syndication, and we've got more and more stuff coming. So again, if you want to change your financial future, if you're willing to do the work, do me a favor and get the course, join the Facebook group. Let's just have some good times. So I see 6 people have joined already. Let's see if chatting works. Can somebody send me a quick message and see if I can see it? Because last week we were having a problem. And actually, I'm going to log in on my phone and see if we see what we see. I should be able to see this, right? You would think. Because I don't see any chats yet, and that's a problem. Okay, let's see. Oh, see, I have chats here. All right, well, I have chats on my phone, so that's just going to have to work. Good morning, Nathan. Good morning, Lumberjack. I don't know why I don't see him here. Maybe somebody can tell me offline about how I could see what's going on. Ah, there we go. Now I see him. Hey, Nathan, Lumberjack, Prasanna, good morning. Ah, I can see him now. That's awesome. Last week was so frustrating. All right, so what we're going to talk about today, folks, is, hey, Jeffrey, we're going to talk about a video coming out later today. I've been working very hard for you. I have been pulling together data since 1970. I'm going to do a video today, probably we'll post it at 6 o'clock Pacific tonight, that you probably really should watch. And it's going to be 50 years of housing data. It's going to be prices, appreciation, wages, interest rates, affordability, ownership, down payments. We're going to look over the last 50 years, and it's going to be enlightening. It is really going to highlight what is going on today in the context of the last 50 years. And it's going to be pretty enlightening because I have the data up through 2020, which is what you'll see tonight. But it also changes when you go to July of 2021. When you really look at where we went in the 7 months from January 1st, 2021 to July 2021, something changed in the real estate market. It frankly went wonky. So we're going to talk about that. But I just want to highlight here some of the amazing data that you can look forward to later. And do me a favor, let's get interactive. I'm going to ask a question. It's going to be, hey, I'm going to ask a question between 1970 and 2020, so 50 years. And I'm going to have you guess what year is the answer. Because a lot of this data I got wrong, right? That's the beauty of pulling data together, is you don't know what you're doing, right? Because data is agnostic, it's not opinions. So for example, what was the most unaffordable market, or I should say not market, year for housing? What was the most unaffordable year from 1970 to 2020? What year do you think was the most unaffordable? And by the way, I calculate unaffordable as a payment as a percent of gross. Okay, so again, payment as a percent of gross. And if you remember anything from my last story, interest rates play a very big part of this. So let's get interactive. I see 3 guesses already. Let's give you some time. Let's be interactive. Let's have some fun together today. So let me see. Let's get at least 5 guesses, and then we will go. So we have 4. We need 1 more. This is going to be enlightening stuff, I think, because you'll be surprised. Well, we've got 4 guesses. I'll wait 5 more seconds. Oh, there we go. Awesome. So the answer is, and we have Sean, congratulations. Dion, you're close. The answer is 1981 and 1982. Payments, average home, average interest rate, average wages, 46% of gross. So again, if you were buying a house in 1980 with the average house, with the average interest rate, the average payment, with the average income, you were screwed. 46% of your gross take home pay would go to that mortgage. Frankly, folks, nobody was getting a home loan with a 46% of gross, both 1981 and 82. Not okay. Not okay. And again, we're going to go through 50 years of data later today, and you're going to see some pretty interesting trends because each of these questions individually, I don't know, it's interesting, it's trivia, but when you can tie the complete 50-year picture together, you might see where we're going in the very near future. So very interesting stuff. All right, so how about, do you know what years home ownership was the lowest? Right, they talk about owner occupant rates. I forget what the exact term is, but basically, what were the lowest rates for home ownership between 1970 and 2020? Do you have a guess? Let's again do this. Let's get at least 5 guesses. Got one. And I will tell you the rates. The rates were below 64%. All right, we've got 3 guesses, I think. Oh, 4 guesses. No, that only counts as 3 guesses. We want to get to 5, folks. So let's be interactive. We got 40 people watching. We just need barely 10% of you to play along with me. I'm having fun this morning. 1, 2, 3, 4. All right. Do we got one more out there? I'll wait 5 more seconds. The answer is you could have picked any year between 1985 and 1990. The home ownership rate between 1985 and 1990 were all below 64%. All below 64%. All right, folks, something I did this time in the 50-year research is I looked at wages. What year were the average wages, wage growth, I guess you would call it, wage inflation? What years were wage inflation the lowest from 1970 to 2020? Again, folks, this is all tying into a picture because it's all important, right? You need wages to pay the mortgage, things of that nature. So what year do you think wage growth was the worst? We got 1, I think, 2. Come on, a couple more. What year were wage growth, wage growth, wage inflation, whatever you want to call it? All right, very cool. The answer is 2005, 2006, and 2007. Wage growth was negative. Negative. It was the only multi-year period over the last 50 years where wages went down. They don't call it the Great Recession for nothing, folks. 2005, 2006, 2007, wage growth was down. Negative, 3 years in a row. Great Recession's no joke. Okay. How about housing crash? I think it is comical when people call for housing crash like it all happens in 1 year. So, what year was housing values fall the most? Do you know what year housing fell the most? And what year was housing fall the most? Got some guesses? So one of the things you are going to see in this 50 years of data when all of this comes together is the lag effect. Housing moves a lot slower than most of you think. A lot of the YouTube idiots out there talk like housing falls like stocks in crypto. It is not the case. So housing went down 5 years in a row, 5 years in a row, but it started in '08. The answer to my question was 2009. 2009, the average house went down 8.9%. It went down 4.6% in 8.9% in 2009, down 2.9% in 2010, down 4.5% in 11, and 1.4% in 12. 5 years in a row, housing falls slowly. It doesn't fall off a cliff. These idiots calling for a 40% fall in a year are so uninformed. There's my politically correct answer. Uninformed. It is amazing. Housing is not a stock and is certainly not crypto. All right. Oh, here's one I got wrong. I got this one so wrong. Let's flip the script from all negativity to positive. Again, remember 1970 to 2020. What year was the most, or I'm sorry, what year was the highest home appreciation? And hint, hint, I got this one wrong. I got this one way wrong. What year do you think housing appreciation was the highest? Again, remember average home US wide. Any guesses? We got 3, I think. Oh, I love the fact that we're all interacting together. Thank you very much. I got to tell you, Matthew, you nailed it. I got that one way wrong. Folks, if you haven't looked at 1978, 1979, you are missing it. This is telling us stuff. The average house in 1978 went up 16.6%. The average house in 1979 went up 16.1%. Back-to-back years up 16%. Folks, remember we are doing this 1970 to 2020. I didn't include any 2021 data because the year's not over. I suspect 2021 might be the best year, but the year's not over. So I did not have 2021 data, just through 2020. Again, yeah, I didn't get that right. I had no idea. I had no idea that housing went up 16%, 78 and 79. Crazy. All right. Interesting. What do you think the highest year for wage growth was, right? We've already talked about wages going down 2005, 2006, and 2007. What year do you think wages went up the most? What year do you think wages went up the most? 99 is a good guess. Probably what I would have guessed and wrong. Come on, a couple more. Let's have some fun. 84, 80, 96. The answer is the same year that housing went up the most, 1978, 1979. Are we seeing a trend yet? Wages went up 11% in 1978, and they went up 9.3% in 79. Folks, if you remember my research from a couple of weeks ago, remember we were all wondering what the hell happened in 20 and 21 where wages jumped and then housing went up? Well, guess what? The last time housing jumped 16% back-to-back years, wages also went up. So again, 1978, 1979. All right, how about this one? When was it cheapest to buy a home? And by cheapest, I mean payment as a part of wages, right? If you make $1,000 a month, when were the average mortgage payment the cheapest? When do you think it was cheapest to buy a home in 50 years? I think we have 2 guesses. Right. You guys are obviously following my channel. So it is cheapest ever in 50 years to buy a home in 2020. Again, remember, we're not doing 2021 because I don't have the full year's data. It was cheapest to buy a home loan. Do I have that data? Yeah, I do. It was 16%. It has never been so cheap to buy a home. Wages to payment. It's all interest rate related. Okay, so now when you get 50 years of data, you can produce an average. So what do we want to do? Do you know what the average home appreciation is over 50 years? Any guesses? Average home appreciation across the US over 50 years, right? You accumulate, you divide by 50. Do you know what the average is? What do you think the average is? Let's get 5 guesses. The answer is a percentage this time, not a year. 5%, 4%, 6%. All right, one more guess, please. Let's have some fun. Average home appreciation. Awesome. The average home appreciation over 50 years is 5.1%. So I'll give that one to Sean, 5 with the guess at 5%. The average home appreciation across the US over 50 years is 5.1%. This one has recency bias all over it. What do you think the average 30-year interest rate has been over 50 years? What do you think? 1970 all the way to 2020, what is the average 30-year interest rate for homeowners? What do you think? The average 30-year mortgage rate over 50 years. Take a guess. Let's get 5 guesses. What do you think? 10%, 8%, 9, 8. Man, you guys are good. I got this one so wrong. I guessed in the 6s. The answer is 7.92%. The average 30-year mortgage over 50 years is 7.92%. Now, what do you think the average is? What percentage do you think the average payment is of average monthly gross income? So take your gross income and divide it by the average mortgage payment over 50 years. What do you think the average payment is? And all of this will become interesting because once you know average, you can look at today and you can go, are we okay? Or are we like totally out of whack? So what do you think the average payment is? And remember, I told you the highest ever was 46%. And I think the lowest I told you was 16%. So hint, hint, the number is somewhere between 46 and 16. Man, some of you are really good guessers. The answer is 25.2%. And again, that makes sense, right? If you're listening to Matt the Mortgage Guy, that's a yes answer from a bank. If your debt is 25% of your income, you're probably getting a yes answer from a bank. So it makes total sense. And now something I've added because a lot of you were asking is now we're doing down payment. What percent of down payment is to your yearly income? So you make 50 grand a year. What part of the down payment? And I'm assuming 10% down for this calculation. So it's somewhere between 50% and 20%. I will give you the range. But what do you think the average down payment percentage is of your annual income? What do you think? All right, one more guess. We'll be at 5. What do you guys got? One more. Okay, there we go. So the average is 32%. Again, this is over 50 years. So the average is 32%. And then the last one I have, I think I missed, was do you know what the average home ownership rate has been over 50 years? This will be the last one for 50 years, and then we're going to tie it to today's numbers and see if we're out of whack. So the 50-year average for home ownership, one more guess. It's somewhere between, what did I tell you the lowest was earlier? Did I have that in here? Yeah, I think I told you the lowest. Yeah, the lowest was 64%. So the average, we got one guess. Let's guess this one. Okay. All right. One more. Thank you for having fun with me. I put together this 50 years of data so we can talk about it. So thank you. One more guess. All right, cool. So the actual answer is 65.4% is the average over 50 years. So now let's talk about all of those averages to 2020 and see where we are at. And I won't make you guess. We'll just walk through these together. So the average home ownership was 65.4% over 50 years. Today, we're at 65.8. So we're close to the average. Home appreciation, average again is 5.1%. In 2020, we were at 6%. We obviously have seen a spike in 2021, which again, I'll talk about later today because I think there's some really wonky stuff going on this year. Obviously, 30-year mortgage rates are unheard of today. The average is 7.92 today, or at least in 2020, they were 3.1. Payment as a part of gross. This is why this is why everybody was wrong about 2020. Payment average was 25.2%. The payment in 2020 was only 15.9%. That said, down payment average is 32%, although the down payment in 2020 was 34%. So you can see the problem being the down payment is increasing. And here's a hint: in 2021, it really got bad. In 2021, I think it was 40-some%. Right. So the down payment is getting harder for the average person to save a down payment because pricing is growing up. So again, that's what I have, 50 years of data. I'd love to get questions from you. Again, this is live Q&A today. Thank you for participating with me. It made the week's effort worth it. Yeah, there's a lot of stuff we can tell in this, and we can see what is going on in the future. Anybody have questions that came up? Let's say, well, as you guys put your questions in, I will go back to the beginning and welcome everybody who participated. Nathan, good morning. Thank you for joining. Lumberjack, thank you for being here. Prasanna, good morning. Ultimate Bargains, good morning. Sarin, good morning. Sean, good morning. Harry, good morning. Thanks for playing. Dion, good morning. Caroline, good morning. Love all of you guessing and being a part of this. Thank you. Don't forget to hit thumbs up and ask questions. I think I'm getting everybody. Ben, good morning. Jay, good morning. Michael, good morning. Terry. Oh, the world's gone to blank. That's funny. Jay, good morning. Did I get everybody? Good morning. Better Home Rental, good morning. Just trying to give everybody a little love this morning. Good morning, Terry. If I miss you, I apologize. It's not intentional. Matthew, good morning. Nicholas, good morning. Ben, good morning. The Ramirez Real Estate Team, good morning. Carrie, good morning. Corey, good morning. Oh, wow, lots of participation this morning. I like it. Nicholas, good morning. Corey, April, good morning. I think I got everybody. Jonathan, good morning. Angel, good morning. Noel, good morning. Jonathan. Wow, awesome. Thanks, guys. Thanks for playing. All right, I think I got everybody. Oh, got to do this every Saturday. This is fun. Yeah, it's fun because, again, going back and looking at the history, again, housing has been around for a while. The data is out there. Unfortunately, it's in lots of different places. So I actually, when you see the report later today, I think it'll go out at 6. I'll actually highlight the data sources. So if you wanted to go build your own, you could. I think it's important to see where the data came from. So that's cool. So Angel, where do you see the USA a year from now? Most actions taken by the government seem crazy. Sure. Is it changing consumer psychology? Years of unemployment. How do you think this will all end? That's a great question. Because Angel, if you know anything about me, you always have to make a choice as an economist. There's so much data out there, and a lot of the data kind of battles with each other. So I have always chosen to follow the consumer. I honestly, I don't know why anybody would follow anything but the consumer. Because the consumer is the largest force in the US economy. And they historically have moved in masses, right? There's not many consumers that are kind of always on the outside, right? The consumer moves in masses. So when you talk about where the US and frankly the world economy is in a year, I think the only answer is what are the consumers doing? I think that's what lies. So if we use that as the basis for my answer, I think I talk about it almost every week. I think the consumer in general is currently flexing their muscle. They are spending their money that they saved. They're doing experiences. I go back to my daily financial news that I do every 7 days a week at 7:30, except Thursdays. The consumers are buying experiences, airline travel, vacations, things of that nature. I believe that there's a lot of companies that a lot of a lot of consumers bought stuff the last year, and that's all going to slow down. Harley Davidson's going to slow down. I think cars will slow down. I think housing slows down. I think Amazon slows down. I think getting boxes is going to become uncool next year. I think the consumer stays strong. I think what we're going through right now with all this noise around what's going on in the health crisis is just that. It's short-term noise. And I don't think it slows down the consumer. I think you are seeing some tweaks on the edges, like some conferences are being canceled again. But I think we have such momentum from the consumers, it'll just run over this blip. But I do think housing slows down. I think cars slow down. I think RVs and motorcycles and all these things, second homes, slow down. They don't crash. I mean, gosh, we're operating at 1,000,003 homes available. They don't crash. It just slows down. So I think in a year, the consumer proves strong. Unemployment falls. Interest rates go up. Rents go up. Supply chains work out. So generally speaking, I think we have a roaring 20s kind of environment. I think next year, from an economy perspective, is pretty good. That's what I think. And I'd love to hear what you think, but that's where I'm at right now. The consumer is a lot stronger than I think most people appreciate. So keep your questions coming. I'm going to get to them in 1 second. All right. What is your biggest learning from 50 years of data? Oh, that's a good question, because I went in not assuming anything. A couple of things that you're going to see later today is housing is very tied to interest rates because it's a payment, not value. I think I've always known that, but it really jumps out in the 50 years. I didn't appreciate the 70s, right? I was alive, but I didn't know anything that was going on. I didn't appreciate how odd the late 70s were, and then what happened in the early 80s. Again, remember what I told you earlier. The best wages were in 78 and 79, and then housing was most unaffordable in 81 and 82. There's just a story to tell there that if we're not careful, we will repeat in the future. Now, I'm not calling for 16% interest rates because I think that's just not possible with what we have. But I think if interest rates went to 4 or 5%, they could have the same impact because it is about payment and the value is so much higher. I think there is so much value in understanding the late 70s and the early 80s if you tweak the data, right? Because again, wages went up, then interest rates explode, then housing was, you're not getting a yes answer on a bank loan in 81. 46% of your income would go to the gross income. That's not even taxes. Yeah, folks, it could get really unaffordable to buy homes if interest rates doubled, right? If interest rates go from 2.5 to 5, whew, housing would slow down. It would be bad. So I'm nervous about the next recession, that's for sure. Yeah, and then the other thing is just how affordable 2020 was. I mean, all these people calling it housing crash, housing crash. I mean, housing was never more affordable in 2020. Housing was so affordable in 2020. These idiots on YouTube. So those are my big two takeaways, Nathan. One is I think we would all do ourselves a better service to look at the years 78 to 82. We are potentially set up for the same thing. That is my big thing. Again, what have I been telling you on my daily financial news? Wage inflation is real. Go back to 78 and 79 where wages went up 16%. Housing got really unaffordable when rates went up in the early 80s. That is what I'm looking at right now. Just the numbers are different. So get that cheap ass 30-year money ASAP. Get that cheap 30-year money. Yeah. Pretty crazy. All right. We are down payment bound. Yes, I agree. Wages are not increasing fast enough relative to prices for people to accumulate 20 down payment. Yeah, that's a big takeaway, and it only got worse. So this data was only to 2020, but it got worse. The down payment's a problem. The down payment is a problem, but let's not forget the government, the powers that be, are talking about down payment assistance. That will skew the numbers. Whoa. Yeah, folks, we've got to do a better job of appreciating 1978 to 1982 because we're like in 1975 right now, and we're staring at a real problem. So I agree. The down payment was also a big takeaway, especially because in 2021 when I looked at July data, it's like 44%. It's not good. Housing exploded in 2021, and it's a problem. Question: is buying a jacuzzi for a rental tax deductible? I would not an accountant, but I certainly would. I would think so, right? It's yeah. I mean, if you put in a pool, it'd be tax deductible in a rental. So I don't know why a jacuzzi would be any different. Yeah, then then you would have expenses, right? I'm guessing I don't own one, but I'm guessing you have to care for it. So that service call would also be tax deductible, I would think. But again, talk to an accountant, CPA. But I don't know why it wouldn't. Assuming it's at your rental. I mean, yeah, I assume so. Good morning, Caroline. Hi, how are you? What else do we got? I'm so happy I have my comments back. What is that? Pranya, good morning. Hope I'm not even close, but I tried. Hey, Bill, how are you? Sean, with the jobs report doing well, but the government doing the rent moratorium and extending student loan first, do you think the Fed still tapers this year? Absolutely, yes. I think the Fed is 1 month away. Yeah, so I'm tapering. It starts this year. It doesn't finish this year. So let's be clear. I believe it starts. I believe they're going to start in November. It could be December, but yeah, the Fed's going to have to. Let's do it. This is something else I'm starting to put out there. I'm putting this out early because I like to put stakes in the ground. I'm right a lot, but I'm also spectacularly wrong sometimes. I think the August jobs report will make the July report look tame. I think we're going to add over 1 million jobs in August. So if you want to play, let me know. I'm going to put the over under at 1 million in August, which we won't even see for another 30 days. But who's with me? Who wants the over? Who wants the under? Interact. You can leave comments below. But I'm going to take the over. 1 million jobs created. And I think in July, what was it, like 963? So we're going to do better. So that's where I'm at with that one. Hartman Comparison Index has a breakdown in housing costs and other commodities like gold, oil, etc. Housing in gold is cheap. Very interesting data you might enjoy. All right, we'll take a look. Know Hartman, or at least know of him. I think I spoke to him once. Today, there is low inventory of small multifamily in Fresno. Any data predictions on inventory? I think inventory goes up across the board. I'm already seeing some frustrated landlords with the government overreach going, I have enough. I think housing goes up from here. That's really hard to break down into small multis, duplexes through quads. That's like the hottest stuff to own in Fresno right now because rents are exploding. Man, rents are way up in Fresno. It's crazy. I've never seen rent growth like this in my 21 years. So I can't speak to small multis because those fly off the shelf. But inventory across the country, Fresno included, California included, it's going up probably the rest of the year. What is my prediction on interest rates? I think that will make housings more affordable. Oh, I think low interest rates benefit. It's not there. Do crazy housing price. Share your thoughts. So let's be clear on this. When I answer this, it will be owner occupant loans. Talked to Matt, the mortgage guy, the other day. I think the average 30-year rate people are getting is just under 3%. So let's call it 3% for this question. I think rates. I think rates are higher from here. I mean, we may have one more month of kind of the 10-year being pulled lower, but we get a million one, a million two jobs created in August. It's off to the races. So I think interest rates are above 3% at the end of the year. And I think they're above 3.5% at the end of 2022. And again, folks, I want to remind you what I said earlier. I think we need to appreciate the years 1978 to 1982 because we are staring at a rising interest rate environment, rising wages a la 78, 79, and a lot of stuff pops in 81, 82. We are staring at a very similar environment. That is a big takeaway from the last 50 years. So that is my complete guess. I have 3 rentals. I'm from Chicago. They have good cash flow. Wanted to know if I should use the capital to buy more rentals to pay down my mortgage. Nicholas, I don't know enough about your situation. I don't know if you're 28 or 68. I don't know if you have a job that makes 20 grand or 200. I believe everybody's investment career has 2 cycles. You are 1 in acquisition mode and 2 in debt pay down, and you can't do both. If you know my story, the first 13, 14 years was growth, and then the last 2 years were pay down. I think if you try to do Dave Ramsey and grow a portfolio at the same time, you were stuck in the mud. So I can't answer your question, but are you looking to grow or do you have enough? That's a question you have to answer. I think paying down debt when you're trying to grow doesn't work. Wages go up 10%, prices go up 20. Yeah, but that's yeah. Wages go up, properties go up. But you got to remember, folks, properties are a debt-based instrument. Not many of you are buying cash. You're getting debt, and that's why the interest rate matters, right? But yeah, that's a big takeaway. You are absolutely right, right? Wages went up 11% in 1978. Housing went up 16. Wages went up 9% in 79. Housing went up 16. Yes, I'm trying to tell you the 78 to 82 period is interesting. Have you looked at the money supply over 50 years? See how it ties into your data? No, I haven't. If you want to collect the data for me and send it to me, I will add it. But yeah, no, I didn't bother looking at that. Do you think the great migration is over for California, Exodus, Nevada, Arizona, etc. is over? There may be more migration to continue keeping prices high through the states, Flat and Bay Area, LA. So the great migration, yeah, migration is still going to happen. Yes, the 1 year acceleration, Gavin Newsom being the #1 Vegas real estate agent, for example. I actually saw that trophy somewhere. It was great. Whoever did that has a great sense of humor. But yeah, I think the great migration is over. If you wanted to move, if you were thinking about moving, this last year. This is everything got accelerated. If you were going to buy a second home, you bought it. If you were going to buy a Harley Davidson, you bought it. If you were going to think about moving from LA to Vegas, you moved. You don't do that twice. So yes, I think the great migration is over. How ready are you to have your hair purple since your students are absolutely killing the houses? Well, at this point, I'm looking forward to it. It is certainly going to happen. The question is what month at this point. So yes, folks, if you don't know what we're talking about, I actually have this contest going on. If 1 rental at a time helps you in any way and you give me your address, I'll mail you this. And if we do 500, I am dyeing my hair purple and sending a big check to a food bank, which, oh, by the way, Lumberjack Landlord, you're going to contribute as well. So how soon are you going to cut that check? That's the question. So yes, I'm looking forward to dyeing my hair purple. That will be fun. Thank you for asking. What's the whoops, sorry. Where were we? What's the highest interest rates could go up to? Well, I think the highest interest rates we saw, I don't have the data, but from memory, were 16.6%. So I guess they could go up to 16.6%. I think you're talking about in the next year. Um, Again, why I think 78, 82 is the period to pay attention to, it's because rates exploded higher. I think if rates get to 5% on a 30-year mortgage, we have a problem. And I think they get to 5%. The question is when. 1981, all FHA and VA loans were non-qualifying assumptions that helped sales happen. Oh, absolutely. Yeah, if you don't know what you're talking about there, the due on sale clause and all that stuff didn't exist in those kinds of mortgages in the early 80s. So a lot of the transactions that were done because housing was unaffordable in 81, as I shared earlier, you were doing subject to and things of that nature. It was the time for creative financing. U.S. 10-year at 3 to 4%, in my opinion. Yeah, I could see that for sure. Uh, Yeah, banks wanted the payment. You're right. Over 1 million. I'm not sure what that is. Have you ever noticed a correlation between war, conflict, and real estate market? No, do not want it to happen, but happens. Just random question. I did not look at that data. Nope. Oh, I see what you're saying. Over 1 million. Got it. That's the jobs question. See, I forget what I said. So Stefan, you're with me on the over. Charles, you're with me on the over. Tennessee, hopefully more states will follow. I hope nobody gets sued or goes to jail. Because again, I actually have it right here. I still have it. I've read this thing twice now. This is the 19-page order from the CDC. Right in the back. Where is it? There are some significant fines that I want no part of. 6 figures, a year in jail. I'm not going to jail. Sorry. But yes, this thing's got to end. It was government overreach at its best. Richard, million jobs created. Are there really new jobs or jobs that were vacated? But I don't know. I don't care. It's a million people working. I don't know. Thanks for the help. You got it. I think you're on something, Richard. Okay, sure. All right. Yeah, you can, Stephen. Yeah, there's lots of people that do that. The Dave Ramsey model. You got to figure out what you want. If your goal was 8, you get your 8, and then you just start paying it off. That's part of getting your money right is knowing your numbers. So yeah, plenty of people do. Plenty of people get to the number and then they stop buying and they just pay down. Absolutely. Wow, this is the first you've been so pessimistic. Nice. I don't think I'm being pessimistic. When have I been pessimistic? I'm being realistic. I'm not being pessimistic. Why are builders are still saying about bidding wars for single family homes in DFW area, Texas, Bay Area, California? Because there's no supply and there's more demand. Late 70s, early 80s, double-digit inflation, unemployment, interest rates. Hope we never see an economy like that. Okay. All right. This country needs SCOTUS to squash all eviction moratoriums. Unconstitutional. I couldn't agree more. I think we're about. I talked to several attorneys, Jeffrey. They're telling me it's about a 10 to 14 day period, the fastest this thing could move. So we've only been on this for 4 days, 4 business days. So yeah, I'm right there with you. Let's see what happens in about another 6 to 10 days. I am right there with you. Completely unconstitutional. Matthew, what I would do would give him my book, frankly. Buying one home may not move the needle. That's why I talk about 4. If you get 4, go to 10. But yeah, I mean, if you don't think one rental property is the difference, it's called one rental at a time. You don't stop at one. Yeah. So I would buy him my book and say, read this, then talk to me about this. Yep. Yeah, I'm not pessimistic. I'm realistic. Thank you. Yeah, I'm never, well, I shouldn't say never. I have moments of being pessimistic, but that's not where I want to live. That's for sure. Might have mentioned with Greg or another expert, is there a prediction for us to reach a housing equilibrium? I assume you're referring to buyer and seller kind of even keel, the 6 month or 5 months of inventory, probably sometime next year. That would be my guess. Sometime next year. It won't come from building. It will come from listings. We are so far behind building new homes. We're building them in the wrong areas. It's not a question of builders can't get us out of the hole. It will come from listings. What are my thoughts on interest rates for the rest of the year? I think they're up slightly. I think on December 31st, the 30-year interest rate slightly higher than it is today. Not a lot, but slightly higher than today. So I think I got to all the questions. And if I forgot to say good morning to you, please realize I didn't mean it. I was just trying to do lots of things. Good morning, Brian, Oxy. I think I got everybody. All right, all right, everybody, this has been fun. I'm going to call it here, save my voice, because I'm going to talk to my students at 9 o'clock. Oh, we got one more question. I'll do one more. Do you feel that even if house prices go down, there will be plenty of people who haven't been waiting to snap up? Yeah, first off, I'm not calling for prices to go down. If they go down, it will be very slightly. We do have some bubble markets, but housing's not going to go down. We have plenty of buyers, and yeah, housing's not going down. So at the end of the day, everybody, take care of yourself. Have a wonderful day. Do the work. If you want to change your financial future, buy the course below, How to Get Started One Rental at a Time. Enjoy how we did it. Also, all the amazing bonus content. And if you do have Facebook, join the group. The Facebook group is called One Rental at a Time Works. That's where I will be in about 14 minutes. Take care of yourself. Have a wonderful weekend. Bye.